Hello, it's Robin Da Vinci, the self-proclaimed money lady. I'm a boomer and I've been through the wars with money and came out of World War II, and my parents had been through the recession. So I have a lot of experience when it comes to managing money. I've owned a company for years and I've run several businesses from high net worth people. And the issue is always the same. What the hell is the bank doing? Now, after the Depression, nobody trusted banks. No one wanted to invest in the stock market. So it was common for people to keep money under their mattress, bury money in the backyard in a can, keep something up in the cabinet. It looked like it was cookies, but it was really, extra money because they didn't want to put their money into an institution that they couldn't trust. So little by little, the banks offered all these incentives and all of these things to get you back in. You get a credit card through a bank. All of a sudden, ATMs showed up. You had more access to your money. People started getting comfortable. They could get to their money on the weekends. There was an ability to maneuver in the banking system because a long time ago, the banking system was very rigid, 10 to 3 Monday through Friday, and that's it. We control your money and you don't get it if we don't say you can. And that became a big problem for a lot of people. So fast forward to now, where banks are starting to disappear. And when I say disappear, I mean the actual physical buildings of a bank, the actual tellers that used to wait on you. They're disappearing. They're closing more and more branches. They don't want the overhead of the building. They want to keep the asset. They're hoping to lease it out to something else. They don't want the overhead of employees, which really bothers me. They don't want bank tellers anymore and branch managers. They just want to pare it down to you using some sort of robot machine or going online to do all of your banking. They're making it so you can take a picture of your check and deposit it. They're trying to get away with having physical buildings, employees. They're really changing the banking industry. And we're kind of sitting there sucking our thumb going, what is happening, right? So I volunteered to teach high school kids about money. And when I explained to them that there's really no money backing up their accounts, they freak out. I said, really, there's not enough money. We just print money. We don't have gold sitting in Fort Knox anymore to back up that money. It used to be that we couldn't print any more money than we had gold sitting there to back it up. In case, oh my goodness, everything crashed down, we would still have money. That's not true anymore. When you put money in the bank, it's not there anymore. Banks invest your money all the time. Your money is in the stock market, not with your choice, but with the bank you're banking with. They invest your money. They make money from your mistakes. So they take your money and invest it, and hopefully they invest it wisely. You never know. Then they make money from the mistakes you make in banking. Overdraft protection. Banks love overdraft protection because not only if you've signed up for it, and there was a time when they were putting overdraft on people who didn't ask for it, and there was a lawsuit and the banks lost, but overdraft protection means that you're taking a loan out on your checking account. So let's say you have $300 in your account, you have overdraft protection, your car payment goes through at $400 and you're $100 short. And the bank says to you, oh, no worries, we covered it. Well, what they did is they charged you $45 to cover it. They're covering you for the $100. That becomes a loan and you're paying interest on a loan. And if you keep doing that, you're going to have a loan to the bank for having an overdraft. And banks make money from your mistakes. NSF charges, they love them. Overdraft charges, they love them. Bank fees, they love them. Wire fees, they love them. If you are banking and you're getting a free checking account, you're probably not getting a lot of services, but you're able to do basic banking for free. But be aware they're investing your money. I tell the kids, if you went into the bank and wanted $100,000 in cash, you would have to call them probably in advance and arrange for it. You wouldn't be able to just go in and get cash. Banks don't carry cash. They don't carry a lot of cash for the reason for holdups, bank robberies. Their cash is invested and floating around the world. Your money is invested in the world, and banks have to keep everything going so that they have enough assets to cover their depositors. People don't understand when a bank used to advertise 13 billion strong, that meant that they had 13 billion in assets to cover depositors' money. So that if their bank shut down and every depositor came to get their money out of the bank could be liquid enough to get the money back to everybody. People didn't know that. Another thing you don't know, all accounts are insured by the Federal Deposit Insurance Corporation, the FDIC. A lot of people don't understand that that it's only insured to $250,000. So you have an account and you're saying, I don't come anywhere near the $250,000, which most of us don't. Okay. Most of us don't have an account that's sitting there with $250,000 in it. But after $250,000, you're no longer insured. So if you have $1 million at a bank and you're using one social security number for all $1 million, if that bank goes under, you're only insured for the first $250,000. You're out of luck for the rest unless they can get it back to you in some way over years selling assets. So what banks don't tell you is if you have honestly $1 million, you need to put it in 4 different banks under your social security number, or you need to have different ID numbers, like federal ID number because you have a business account with $250,000 in it, a personal account with $250,000 in it. But you can't have the same tax ID number, whether social security or federal, with more than $250,000 to make sure that it's insured. And I can honestly tell you that I'm not sure the federal government can always come through with that money, but they are insured to $250,000. So when you saw those things, and I'm going to say it was 8 to 10 years ago, where you were investing and the investor said, I'm going to put your money in 8 different banks, that's why, because you're not protected after $250,000. I'm not sure that people knew that, wanted to know that, or can do that. But the banks make money from all of your fees, your overdraft, and all of that, and they only insure to $250,000. So research your banks, spread it out, and keep yourself safe. Also, the kids were shocked to find that using an ATM that isn't your bank gets 2 fees unless you have an agreement with your bank, which most people don't. If you go to the bank and you say, take $40 out of the ATM, but your branch isn't available and you go to another branch, that branch of that bank will charge your bank $2.50 or $3.50. And then your own bank will charge you another $1.50 to $2.50 because they have to pay the other bank. So calculate how much cash you need and do a better job and get it from your own bank where it's free. Now, I consider it a privilege to be able to go somewhere and get my money out of a bank, even if it's my own, and I'm willing to pay that bank fee. But in general, my advice is plan your cash better so you're not racking up $5 in fees for every $40 you take out of the bank. That doesn't make sense at all. So remember, banks are there to make money. It's called miscellaneous income on their books. They are there to make that money, and they want to make that money, and they love to make money from your mistakes. So don't give it to them. The best way to be free of bank fees is to not make mistakes and to keep track of your money. So there's my best advice for how banks work. Those are just slight little insights into how they work, but a lot of people don't know. And the FDIC to $250,000 is a really important part. Not that I think a lot of my listeners have $250,000 laying around, but I have hope that all of you will. And there's my advice. So thanks for listening. Like and subscribe. See you soon.